How do you know when a stock has found its bottom? Hey, I'm Sasha Evdokov. In this video, I'd like to share with you how you can tell if a stock has made a bottom. Now, we are always trying to bottom fish. At least many of the beginners always try to find the bottom of the stock, or when to get in and when to get out of a stock. And you're always trying to find that lowest point. However, it's very difficult to find or catch the lowest point of a stock. So instead, what I like to do is look for a trend change. So this is kind of a tip. So let's look at how a stock goes lower and how you can catch that bottom part of the stock. So if a stock is moving lower, it's moving from its highs and it starts trending lower and lower. It's usually in a wave type pattern or a stair-step pattern. So as it's making these lower lows and lower highs, this is the trend of the pattern. So whether you're looking at the trend in a short-term phase, meaning it could be just for multiple days where the stock goes down multiple days, pops back up for a day or two, goes down multiple days and pops back up. Because stocks don't go straight down, neither do they go straight up. They make these little wave patterns or stair-step patterns. So once this pattern reverses and the stock now starts making higher highs and higher lows, you'll see the trend kind of start pushing upward. And that's kind of where you start seeing that the stock has made its bottom, is when you see the same type of time frame changing its direction and changing its pattern. So when the stock is going lower, it's making lower highs and lower lows. Once it changes that pattern and it starts making higher highs and higher lows, now the bottom was there. Now, of course, it's tough to time that bottom or lowest point. So instead, what you want to do is catch the new trend of that pattern. So catch where the pattern is earliest to change in direction. So what you want to do is look at the A to B, B to C, and C to D patterns. I talk a lot about this in the green foundational course actually, but that's really what you're looking for when you're looking for the bottom of a stock, is you're looking for that change in direction from making the lower highs and lower lows to higher highs and higher lows. That's when the direction has changed, and that's when the momentum has changed. And you want to look at it in terms of the same amount of time, in terms of perspective. So you could be looking at it for multiple days or multiple weeks, and then looking at it for the change in direction the same amount of time, because stocks will go up and down multiple times within a single day. But really, what amount of time are you looking for the stock to change its direction? Are you looking to hold it for just a few days, or are you looking to hold it for a few weeks or a few months? So those are the time frames then you need to look at. And that's one of the easiest and simplest tips in terms of finding the bottom of a stock. Now, like I said, once you found that bottom, again, you can't go back in it because the bottom has already passed. It's like spotting a triangle pattern or a flag pattern. You know, normally the pattern has already developed or evolved. So instead, you're looking to get at the early point of when the new trend has started. And just because it went up a little bit doesn't mean you missed the trend. It just means the new pattern is starting to evolve. And you want to get in, of course, as soon as possible. But you don't want to get in too early, because getting in too early, the stock can continue to head lower. So that's just kind of one of the insights or tips that I watch. And I just try to keep things as simple as possible. You don't have to make it too complicated using crazy indicators. It's simple. Is the trend going down, or is the trend heading up? Where is the pattern? And look at it in length, in terms of length. How is it changing? So that's one of the easiest and quickest ways to find your bottom. And then when you get in is right after it's made its bottom or consolidation pattern, then you can get in. So usually stocks are more healthy when the consolidation pattern is forming after it's been going down for a while. It consolidates, goes sideways for a bit, and then it continues to move higher. Those are the healthier types of moves. If it just goes down and then just bounces, typically stocks will go back and retest levels if they do crazy bounces like that. So that's my key tip in terms of finding a bottom and when to get in. Use that to your advantage. Look for those A, B, C, D patterns and use them to your advantage in your trades. I hope you enjoyed this video. Thanks for watching. If you want to catch my rapid recap videos where I show you the stocks that are moving in the current market conditions today, then go ahead and sign up to my rapid recap right here. Just go to this website, click this link, and enter your name and email address, and I'll send you those rapid recap emails as soon as I make them. They don't go public on YouTube, so make sure you sign up. And if you're interested in my courses, if you want to get in-depth training materials from 3 to 6 to 10 hours long and take your trading quicker, just like that, to that next level, check out my website at tradersfly.com. Thanks for watching. I'm Sasha Evdokov, and remember to do what you love, contribute to others, and most importantly, live life abundantly. I'll see you next time.